Let's talk to Clive Lambert. He's the director of FuturesTechs. Morning to you, Clive.
Hello, Mr. Moose. How the devil are you?
I'm pleased it's Friday. Right, so we have three charts to go through. You're an award-winning technician, so we're all paying attention. Let's kick off with the DAX weekly. If my memory serves me correct, you highlighted this upward sloping support line the last time you were on and said a break of it would basically lead to a fall. Good homework. Did it do exactly what you wanted it to do?
Rather scarily, Nick, it did it to the tick.
Right.
I suggested a target of 11,900, and that was the low on that down move a couple of weeks ago. And that's not me being clever. That's Mr. Fibonacci doing his thing for us.
Right.
Because it was a Fibonacci retracement level, and so we hit it, we bounced, we posted a hammer at the tail end of last week, and this week has been spent tentatively trying to go higher, but actually in the DAX not really achieving a huge amount when you compare it to the US markets.
Understood. So would I be right in saying that basically you'd have two weekly closes below the upward support line, and therefore you would be looking to basically short this market?
I think I would be steering towards looking for shorting opportunities in the DAX, and we've got a lot of levels still to clear to the upside before we can say that we're, that's a happy looking chart again. The first one will be 12,550.
Yeah.
The next level would be 12,750. And that's kind of our breakdown level that we talked about a few weeks back before, as the trigger for that move to 11,900. And also right around there at 12,750 is the 200-day moving average, or if you want to talk about that in months, the 10-month moving average, which I think is something you sent me last week, wasn't it?
Yep.
You asked me. You said something. You'd seen it in the in a publication. Well, 10 months. In business days is about 200, really, isn't it? It's about 108, 200. So, that's not a coincidence, if you like.
Understood.
So, whilst the US markets appear to have been really strong in the last week or so, that might be a dollar weakness story. And on this side of the pond, we're not seeing such a strong reaction.
Understood. Okay, well, let's move on to the weekly chart of the dollar index.
Yes, which kind of segues nicely, doesn't it? Because I'm talking about a weak dollar.
Well, clearly it's grabbing the headlines at the moment. You've got a series of lower highs and lower lows. We're around key support according to this chart, are we?
We are indeed at key support on the dollar index chart. But I'll tell you what, we've been here before. And the last time we were here at the end of January, I was on your show talking to you saying that 88.30 is a key support. We then recovered to 90 something. What was it? Let's have a look on my chart. 90.45. So we're looking at the dollar index, and then we sold off again. And as we speak, as of right now, we're back at 88.00 to 88.30 for the dollar index. So it's really, I'm saying the same thing as I was saying 2, 3, 4 weeks ago, which is this is a key support. It needs to hold. Otherwise, we see further weakness in the US dollar, and the next target on the dollar index chart is about 84.70.
Right.
And so if we did break 88.30 and see a move to 84.70, then that's going to have quite a profound effect on a lot of things that a lot of people are looking at. That should see gold busting through $1,400 and going gangbusters. It should see oil back at the highs and doing a bit more. It would see euro. It's got some pretty major implications. It would see the euro up. Getting up to 130, things like that.
Right. Okay, well, let's wrap up with Brent Crude on the weekly charts. A lot of people have suggested on the fundamentals that this was due a pullback. What are the charts saying?
It did hit that again. This is a bit of a sort of let's revisit something from the last time I was on. I said we'd hit resistance at 71.30 to 71.40, but I still thought it was one of the most bullish, beautiful looking charts that you could see. And we've got a nice rising uptrend line, and I think you should buy dips. It broke the uptrend line.
Okay.
So, and that was last week, and so we did need a rethink at that point, and we have seen a retracement since. Now, you're a man who likes your candles, don't you? Or is it just when you're talking to me?
Yeah, just when I'm talking to you, obviously.
Right, this week so far, candles-wise, inverted hammer, green candle, and then another hammer yesterday. The hammer candle is the hammers are the important ones there. They're showing signs of downside rejection, of dips being bought, and I think that's the tune we're singing again now in this one. Buy the dips, we're going back to 71.40.
On that note, Clive, thank you very much indeed for your time.
Thanks, Nick. Good to speak to you.
And to you.